Hello. Hello. Am I audible to all?
Hi, sir. Yes, sir, you're audible.
Yes, ma'am. Thank you. I
Okay, sir, you can
welcome all
start the
for
session.
the second session of this today's session. Today is the final session of this application of income on the exemptions for charitable institutions in the Income Tax Act. So today we'll see Form 10B and 10BB and ITR 7, the practical aspects of those forms. I'll present my presentation now. I'll share my presentation. I hope my presentation is visible to all. Is it visible?
Yes, sir, your presentation is visible. Yes, sir,
Okay,
it is
fine.
visible.
Okay, fine. Okay. So once again, good evening, one and all who are present here. So today we'll go through the topic practical aspects of Form 10B, 10BB, and ITR 7. So yesterday we have discussed about the provisions and sections which is related to the application of income for charitable trust and institutions as per Income Tax Act. So today we will see the practical aspects of the return and the forms to be filed. So as per section 11, these are the 5 important conditions to claim the exemptions. So first one is registration. So you should be registered with the Commissioner of Income Tax Act, and you should maintain books of accounts and other documents as prescribed by the tax department, especially as per Rule 17AA. Your accounts has to be audited. So audit report has to be submitted in Form 10B or 10BB within 30th September as applicable, and you have to file the income tax returns within the due date of 31st October. So now it is extended up to 10th December, and the application of income should be within India. So with this introduction, first of all, so let us see who can be the auditor for an NGO which is registered under section 12AB or got approval under section 1023C. So the accounts of the trust or institution for that year have to be audited by an accountant. So this accountant is defined in section 288. So what does mean by this trust has to be audited by a chartered accountant. So the chartered accountant, in case of a company, he should not be disqualified under section 141(3). For trust, he should not be a person referred to in class A, B, C, double C of section 13(3). That means the related party, he should not be a related party and relative of the above. So who are all the specified person under section 13(3)? Let us see today. So the author of the trust or founder of the trust, if the chartered accountant is a founder of the trust or author of the trust, he cannot be an auditor for the organization. Any person who has made a substantial contribution to the trust or institution, that is to say, any person whose total contribution up to the end of the relevant previous year exceeds 50,000. This is very, very important limb. This has been amended in this Finance Act 2025. This monetary limit of 50,000 up to the end of the relevant previous year has been changed to 1 lakh during the previous year or up to 10 lakh from the inception of the trust. So this is amended in Finance Act 2025, and during the previous years, this is the definition which prevails. So any person who has made a substantial contribution up to the end of the relevant previous year, that means from the inception of the trust up to the end of the previous year, if you have made any donation to the trust, even though you are an auditor, you are making any donation to the trust and that donation monetary limit exceeds 50,000 up to the last relevant previous year, then you are not eligible to be an auditor for the trust. And whether such author, founder, or person is a HUF, a member of the family, any trustee of the trust or manager of the institution. So these are all the specified persons referred under section 13.3. If you are coming under the specified person, you are not eligible to be an auditor of the firm, audit of the organization. And section 12A 1B2 tells about the certain conditions which has to be fulfilled to claim the exemption under section 11 and 12. So what are all the conditions? The first condition is tax audit report to be filed on or before 30th September when the income exceeds 2.5 lakhs without giving effect to section 11 exemptions. So to check the tax audit applicability, you have to check your income whether it exceeds 2.5 lakhs above without giving effect to section 11 exemptions. So numerical examples we'll go through in the upcoming slides. So as far as this limb is concerned, if your income is more than 2.5 lakhs without giving any effect to section 11 exemptions, you need to file the tax audit report. The due date is on or before 30th September. And if you are failure to furnish the tax audit report, exemption under section 11 will not be available and income will be computed under section 1310. And we have to maintain books of accounts as per rule 17AA and report to be filed in the prescribed format. That prescribed format is now form 10B and 10BB. So there are two rules, rule 16CC and 17B, which says the same thing. So if your total income is greater than 5 crore without giving effect to the provisions of subclasses 4, 5, 6 and 6A of section 1023C or provisions of sections of 11 and 12, or has received foreign contribution or has applied any part of income outside India, then you need to file form 10B. And if you are not fitting under this first condition, you have to file form 10BB. For all other institutions which are not covered under these three categories, you have to file form 10BB. So this rule is for the institutions to which form has to be filed, whether you have to file 10B or 10BB. For example, if your total income is more than 5 crore without giving effect to the provisions of sections 11 and 12, or you have received the foreign contribution or has applied any part of income outside India, you have to file form 10B. For all other cases, you have to file form 10BB. So my question is, before that, if a trust receives an income of voluntary contribution of 1 crore and corpus donation of 10 crore, so that voluntary contribution is 1 crore and corpus donation is 10 crore, whether we have to file form 10B or 10BB is the question here. So this corpus donation is exempted under section 11(1)(d). So therefore, what the rule says, without giving effect to the provisions of section 11 and 12. So this corpus donation is exempted under section 11(1)(d). So without giving effect to that section 11(1)(d), we have to see the monetary limit for filing form 10B or 10BB. So here, even though this corpus donation is exempt under section 11(1)(d), without giving effect to that section, the total gross receipt comes to 11 crores. Therefore, form 10B has to be filed. So any other case, so other contribution 50 lakh, your corpus donation 1 crore, capital gain 10 lakhs, receipts 1 crore. So all put together is 2.5 crores, which is less than 5 crores. Then we need to file form 10BB. So here another question. So in this example, instead of corpus donation, if this is an agricultural income, this 10 crore is an agricultural income, whether I have to file form 10B or 10BB. Can shall anybody put it in a chat box? Can you reply in the chat box for this question? So if you are receiving agricultural income of 10 crores and other voluntary contribution of 1 crore, so whether your whether you have to file Form 10B or 10BB. If it is an agricultural income and voluntary contribution of 1 crore, agriculture income of 10 crore.
10B only, sir.
Okay. 10B or 10BB? Yes, 10BB. Because this agricultural income is exempted under section 10. So here the rule says that you have to consider before giving effect to section 11 and 12. So this agricultural income is exempted under section 10. Therefore, Form 10BB has to be filed. So I have another 2 more questions. So if we have a total income of 1.5 lakhs and I have a total application of income of 5 lakhs during the year. So whether I have to file Form 10B or 10BB, is the tax audit report is applicable for this scenario? So this applicability has to be checked by the receipt of income, and it should not be as per the application of income. Here in this case, the total receipt of income during the year is 1.5 lakh. So therefore, tax audit is not applicable. So whether this tax audit limit 60 is applicable to 10B also? No. So you can refer chapter 9 of the Council General Guidelines 2008. This tax audit report filed in the form 10B or 10BB will not count under the limit of 60. And if a trust has nil gross receipts or gross receipt less than 2.5 lakh, then audit is required or not? Audit is not required under the Income Tax Act. However, if it is mandated in any other Companies Act or if it is mandated in the Societies Act, then you have to audit for that act. But for Income Tax Act, it is not applicable. And then, so in this limit, the first limb is total income is greater than 5 crore, or the second limb is has received any foreign contribution. Hello? Yes. Has received any foreign contribution. So irrespective of this limit, if you have received any foreign contribution, Form 10B is applicable. So for example, if an organization has received 1 lakh rupees of foreign contribution, then you have to file Form 10B. You should not go to Form 10BB. So the monetary limit is not applicable for the organization which is receiving any foreign contribution. So what is the meaning of foreign contribution? So this foreign contribution shall have the same meaning assigned to it in class H of subsection 1 of section 2 of the Foreign Contribution Act. So what does that section 2H says? Foreign contribution means the donation, delivery or transfer made by any foreign source of any article, any currency, whether Indian or foreign, of any security, include shares, scrip, stocks, bonds, etc., and units of mutual fund. There is an explanation to this provision. That explanation says that is received it from any foreign source, either directly or through one or more persons, shall also be deemed to the foreign contribution, and income derived from foreign contribution or interest thereon shall also be deemed to be the foreign contribution. For example, any interest received from the foreign contribution bank account, you're receiving a savings interest from the foreign contribution bank account or FD interest from the foreign contribution account, then it will be treated as a foreign contribution, and this has to be taken for the calculation of tax audit limit. So the interest from the foreign contribution account is considered as a foreign contribution. However, for example, if it is an organization, education institute, it is rendering some services to the foreigner or non-resident, and it is receiving any fees from him, whether this will be considered as a foreign contribution, or if it is a hospital, they are rendering some medical consultancy to the foreign soil, so they are receiving fees for that, whether this is considered as a foreign contribution? No. Why? Because the explanation says that Foreign contribution is by way of fees or towards cost in lieu of goods or service rendered by such person in the ordinary course of business, trade or commerce, cost shall be excluded. So if it is done in the ordinary course of his business, so it should not be included as a foreign contribution. So mere rendering of service to any persons who is who is a non-resident or to the foreign soil will not contributed as a foreign contribution. So if any services or activity rendered in ordinary course of business, then this should not be included as a foreign contribution. So this is the important explanation in the foreign contribution definition. So anonymous donation, this and all yesterday we have seen. And applicability of Form 10B and 10BB, we have already gone through the monetary limit for which 10B and 10BB is applicable. So these are all the classes and schedules applicable in Form 10B and 10BB. So if 10B is concerned, there are totally 49 classes and 29 schedules. 10BB, so totally 32 classes and 7 schedules. It is notified by notification number 7/23, dated 21/2/2023. So these are all the common classes. This class references in Form 10B ITR 7 I have given here. So you can refer this. Once I share this presentation, you can refer in this. So these are all the common schedules which is reflected in Form 10B and ITR 7 both. So these are all the additional classes. These 8 classes are additional classes which is not in Form 10BB but only available in Form 10B. So I have given the comparison category wise and class wise here. So what are all the classes applicable in 10B and 10BB? So ITR 7. So I'm taking parallelly ITR 7, 10B and 10BB. So I'm in the same slide, I will be discussing the applicability of the classes and the applicability of the items which is in 10B and 10BB and ITR 7. So we'll go parallelly together. So for example, if you take ITR 7, so to whom the ITR 7 is applicable, who are all the assessees have to file the ITR 7. So there are 18 types of assessees who have to file the ITR 7. So I have given the list. This is available in the income tax portal also. So for example, if you say that serial number 1, taxpayer in receipt of income derived from property held under trust or other legal obligation wholly for charitable or religious purpose or in part only for such purpose or of income being voluntary contribution referred in section 224 2A of the IT Act. That means for the charitable and religious trust, ITR 7 is applicable if they are registered under the Income Tax Act. That means if they are registered under section 12AB or section 1023C, then ITR 7 is applicable, and there are other assessees for which also ITR 7 applicable. So today we are going to see about this serial number 1 assessees. So whether the section 8 companies has to file ITR 7 or ITR 6. So there is a fact issued by the department. So section 8 company, even though they are registered as a company, they have to file ITR 7 if they have registered under section 12AB. So section 8 company has to file ITR 7 and not ITR 6. So these are all the due dates for filing income tax returns and audit reports. So first of all, Form 10B and 10BB. So for that, due date is 30th September as per the Income Tax Act. However, that has been extended up to 31st October 2025, and further it is extended to 10th November 25 for this assessment year, for assessment year 25-26. And ITR 7, ITR 7 original return, their due date is 31st October. If you are covered under the tax audit report, if you're covered under tax audit report, your due date is 31st October 2025, and that is also now it is extended up to 10th December 2025. And ITR 7 not subject to audit, its due date is 31st July. Even though if you have registered under section 12AB, however, your gross receipt is less than 2.5 lakh, then your original income tax return due date is 31st July 2025. So that has been extended up to 16th September 2025 during this year. So belated return, there is no extension as on date. So it is 31st December 2025. And Form 9A and Form 10. Yesterday also we have discussed about this Form 9A and Form 10. So as per the Income Tax Act, the due date is 2 months before the filing of income tax return. So that means the due date comes to 31st August 2025. However, there is a circular number 6 bar 2023. That circular has clarified that this Form 9A and Form 10 can be filed before filing the return of income tax. So now the due date as per that circular, it is on or before filing the income tax return. So that due date is regularly it is 31st October 2025. For this assessment year, it has been extended to 10th December 25. For form number 10 is also the same stand prevails. So what about belated return? If the returns are not filed within the due date, the exemptions cannot be claimed as per section 11. So we have seen that conditions in the first slide itself. So what if the belated return, if we are filing the belated return, whether we are eligible to claim the exemptions under section 11? So there is a condonation of delay petition is available. We can file for condonation of delay, and if you are filing as a belated return, we are eligible to claim these exemptions. However, if you are filing as an updated return, so these exemptions are not available to us. So the calculation has to be as per section 1310. The income tax calculation has to be as per section 1310. So this is the general structure of the ITR. So ITR has been divided into three types: Part A, Part B, and schedules. Part A is general information. Part B has the outline of total income and tax computation. And there are schedules. So yesterday also we have discussed about the calculation of the computation of the income. So it is not as per the heads of income. So the income has to be considered as a commercial manner. So heads of income are not applicable to the charitable trust. So let us start with the Form 10B and 10BB. So I'm going with Form 10B, so which covers all the aspects of Form 10BB and ITR 7. So each and every slide I have mentioned whether this part is applicable for ITR 7 or Form 10B. So I have mentioned in the each and every slide, so we can go through that in that part. So in the Form 10BB certification part, so we are certifying on two parts. So one, we are giving comments about our annexure and another about accounts. So here what we are certifying, what we are taking a responsibility means in our opinion. So we are giving true and correct view. So we are certifying that the particulars given in the annexure are true and correct. So here we are certifying that the figures are true and correct. Here we are certifying that accounts are give a true and fair view. So these both are two different views. So we can give our comments, qualifications, observations about the annexure here, and we can give about the comments and qualifications about the accounts here. And as far as the books of accounts are concerned, for other assessees like private limited, partnership firm, and everything, we'll be preparing the profit and loss account and balance sheet. However, the non-profit organizations are concerned, we'll be preparing income and expenditure account. So generally, income and expenditure account, receipts and payments account, and balance sheet. Some of them will not be preparing receipts and payments account. They'll be preparing income and expenditure and balance sheet account. However, the taxation and application of income for trust has been allowed as per the actual payment basis. And also for capital expenses also, we can claim 100% of the total application during the year in the previous year itself. So that income and expenditure will cover only the revenue part and not on the capital part. So but we are certifying the application and the income, everything which is as per the computation which is mentioned in section 11 to 13. So however, here that income and expenditure means it is income and application. That means either we can prepare receipts and payments account and we can attach it to that, or we can prepare a statement computation memo and we can give a observation that so this capital expenses, everything income and application has been dealt with the all the observations are given in the computation of income. Like that we can give an observation in this annexure and accounts part. And whether this ICDS is applicable to us, no, ICDS is applicable only to the PGBP part of the computation. So ICDS is not applicable to NGOs and trusts. So class 1 to 8. So this class is same for 10 BB and same for the ITR part A, general A2 to A12 is the basic details and legal. Here from point 1 to 5 is the regular basic details, and the point number 6, other address if applicable. So yesterday we have discussed about the address. So if you are having any other address other than the registered office, if you are maintaining books of accounts in other address, then what we have to do, we have to decide this address. This decision has to be taken by the management by way of a resolution, and this has to be intimated to the jurisdiction assessing officer within 7 days of such resolution. So this is very, very important. If you are maintaining any books of accounts in the other than the registered office, so you have the decision has to be made by way of passing a resolution, and that resolution has to be intimated within 7 days of that resolution to the jurisdiction assessing officer. So here my question is, if this is not intimated by the assessee within the 7 days, so at the time of reporting 10 BB, auditor comes to know about this. So what auditor has to do? So auditor can give an observation in the comments part and ask the assessee to intimate now. So whenever auditor comes to know, at least ask the assessee to intimate that to the jurisdiction officer now, and we can made a comment, we can give an qualification or observation part, and we can file the Form 10B. So this type of audit and whether the audit is established under instrument, this is a common thing. It is self-explanatory. And class 9 registration details. So class 9 asks about the registration details. Where I can find that registration details, you can refer to Form 10AC or 10AD. So from 1st April 2021, this registration method has been entirely changed. Prior to 1st April 2021, the 12-year registration is on a perpetual basis. So one-time registration is enough for the 12A or 80G. However, this has been amended with from Finance Act 2020, and from 1st April 2021, the registration is for 5 years, and every 5 years you have to renew that. And further, there is an amendment in the Subsequent Finance Acts, and now they have made that for small trust, registration is for 10 years, and for trust having income more than 5 crores, it is for 5 years. So this registration details, everything is available in Form 10AC or 10AD. So what is meant by registration or approval? If you got a registration under section 12A, that is registration, or from under section 1023C, it is approval. So now with effect from 1/10/2024, this approval route has been withdrawn and only registration route prevails. So there is a 15-digit URN will be given as a registration number. That is also you can refer it to Form 10AC 10AD, that has to be mentioned here. So who is the authority, whether PCIT or CIT exemption, you can refer it in the Form 10AC, that has to be filled up. From date from which the registration is given, that has to be filled here. So this registration, here I have a question. So whether the provisional registration is taken, the auditor also should see that they apply for final registration under Form 10AB in 6 months from when the activity started. For example, for a new trust, if they have taken the provisional registration and if they have commenced the business, commenced the activity, sorry, not business, if they have commenced the activity, then they have to apply for the regular registration within 6 months from the commencement of activity. So if you have to check that Form 10AC whether this is a provisional or regular registration. If it is a provisional registration, then auditor has to check whether the activity has been commenced or not. So if it is commenced, they should have been applied within 6 months from the date of commencement of activity for the regular registration. Otherwise, we have to give an qualification or observations. We have mentioned it in the observation, and we should ask the assessee to apply for the regular registration with a condonation delay. So these are all the classes under which registrations are applicable. So this you can refer. This is already available in the notes part of the Form 10B. And management part. So what does mean by management? So details of all the author, founder, settler, trustee, members of society, members of governing council, director, shareholder holding 5% or more of the shareholding. For example, here there are societies which are having 100, 200, 300, 400,000 of members for that society. Whether all these members has to be reproduced in this table, is it applicable to give all the members? So the answer is no, we need not give all the members, only the members who are involved in the management. So how the auditor will know that these members are involved in the management? We have to get a management representation letter from the management. We have to rely upon the details given by them. So it is advised to get a MRL for the these details before filling in Form 10B. So this ID code has to be given. This ID code either PAN, Aadhaar or other IDs also applicable. So you can give the ID code details here. So these details can be cross verified with Form 10A or 10AB. While registration, at the time of registration or renewal of registration, you can check the application form. So there they have filled up the trustee details or managing council details, shareholders details, everything they have mentioned there, so that we can cross verify. We can cross verify with Darpan portal. We can cross verify with FCRA registration. So we can check that all other are same. If there is difference with that, we can check with the assessee and we can give a suitable note in the observation part. Class 11 and 12 objects. So objects of the auditee. So we have to give the objects. There are 7 limbs in section 215. Yesterday we have seen in detail. So we have to give that under which object this organization is covered. So this is also can be cross verified with the application Form 10A or 10AB, and you can check the trust deed also. For example, in Form 10A and 10B, they would have selected relief of poor and education, but however in the financial statements they would have made some expenses towards medical, and auditor has to certify that these objects they have conducted the activity as per the objects for which the registration is granted. So therefore it is advised to cross verify with the Form 10A, 10AB and financial statements and trust deed and form an opinion according to that. And this re-registration part, this is a very important thing. If any trust they are modifying their object, then they have to get the approval from the CIT before modifying the object, and after getting the approval they have to amend their deed or amend their MOA bylaw copy, and after amending that deed they have to re-register under section 12AB. So even though you have a registration period validity for 5 years, on a second year you are modifying your object means, so you have to re-register that. So many of them are missing this. So if there is any change in the object, the process is like this. First you have to get the approval from the CIT, and after that you have to amend the trust deed or bylaw copy, and after that, after amending the deed, within 30 days of time period you have to apply for the re-registration. So many of them has missed this. I have seen a lot of the trusts, those who have amended their object without getting the approval from the CIT exemption and also from the re-registration part. So this will be a problem for them if they are going for the renewal of their application after the expiry of their validity period. So this is very, very important, and auditor also has to be comment on this. So if you have come across any change in the object of the trust, so we have to check that whether they have re-registered, and we have to give the modification date and whether they have applied for re-register or not. Those things we have to comment on this. So it is very, very important for the auditor to check on this part and advise the client to re-register for this. And this provisional registration, as discussed earlier, if the trust has been granted provisional registration, they have to apply for the renewal of they have to apply for the regular registration within 6 months from the initial date of commencement of activity. So here I have a question: what is date of commencement of activity? What does mean by commencement activity? For example, I have started a trust, so I have opened a bank account. So questions I'll take at the end of the session. So for example, I have started a trust. So that trust registration date is 1st April, and I have opened the bank account. The bank account opening date is 1st May, and I have received a donation on 1st June, and I have donated to another trust on 1st July, and I have made an capital expenses on 1st August. So which is the date of commencement of activity? Whether the registration date of the trust, or whether the date of opening of bank account, or whether the date of receipt of my first donation, or whether date of donating to other trust, or the date of making of first expenses. Among these 5 dates, which is the date of commencement of activity? Can you post in the chat box which date I have to take? Anybody?
Registration, sir.
Registration date. One answer I got is registration date. Anybody differ in this? Okay. So the date of commencement of activity is the date in which first expense of the trust is made. For example, even though I have opened the bank account, even though I have received the donation, that is not considered as the date of commencement of activity. This date of commencement is nowhere defined in the Income Tax Act. So it is generally taken by the assessing officer. So that is the date of first expenses of the trust. In our case, it is 1st August is the date of commencement of activity. So if a new trust, even though if it is receiving the donation, it is not taken as the date of commencement of activity. The first expenses when it is making, it is the date of commencement. So if the trust is making a donation to another trust, that is also not considered as the date of commencement of activity. There are ITAT rulings for that. So first the expenses when you are making, that is date of commencement of activity. Within from the 6 months from that date, you have to apply for the regular registration if you are already having the provisional registration. Okay, so if for that new trust to those who are granted provisional registration, this class is applicable and auditor has to comment on this. Books of accounts. This is very, very important. Yesterday we have seen about the rule 17AA. The manner of books has to be maintained, period of books has to be maintained. Everything yesterday we have seen. So auditor has to comment about this. There are 18 types of books of accounts which is prescribed in this form. So that we have to comment, and very, very important. So here if you see that whether maintained by the auditee, that we have to comment, whether maintained in a computer system, that is also we have to comment, whether maintained at register office, that is also to be comment. If maintained at any place other than register office, that address also to be mentioned here. And they are asking about the when the decision is taken by the management and whether this has been intimated to the jurisdictional officer. So for all the books of accounts, for all the 18 types of books of accounts which is prescribed here, we have to auditor has to give the opinion on this, whether it has been maintained in the prescribed format, whether it is maintained in which address, everything we have to comment on this. So whether these books of accounts have been audited also has to given. So first thing is if it is maintained in other than the register office, the resolution has to be passed. It should have been informed to AO within 7 days. If it is not, we have to give it in our observation. And whether it is maintained in cloud, accountant office, so backup, so everything has to be, we have to check, auditor has to check those things. And all 18 items, whether we have to select or any not applicable formats is available, you have to check. And if there is any business, incidental business or business is held by the trust, so that books of accounts also we have to comment in that, and separate books of accounts has to be maintained for the for those business activities. So there are some institutions, for example, if you take see this churches and dioceses, so they'll be having around 100 200 of parishes in different places under a single registration, 10 20 schools, 20 30 colleges, that will be in a different location. However, the register office will be the diocese or archdiocese, and these books will be kept in different places and different institutions. If that is the case, that multiple places has to be informed to the jurisdictional assessing officer. Resolution has to be passed. So for companies, you can check the ROC registration and ROC filed forms to confirm with the register office and other addresses. If they are having GST, you can cross verify the GST also to ensure the addresses which they have given to us. So these are all the records and books of accounts to be maintained as per the Form 10B. So advancement of GPU. So general public utility. Yesterday we have seen the seventh limb of seventh limb of section 215, which is general public utility. Here we have to give the details about that GPU. If the trust is registered under GPU or carrying any business, so this we have to give. If it is more than 20%, so that we have to mention it. And if it is more than 20 percentage of business activity, so that is considered as a considered not as a charitable activity. So and there is an Ahmedabad Urban Development Authority ruling, that is also we have discussed yesterday in detail. So those details has to be given in this part. So this is about the business undertaking, section 11(4) and 4A. Yesterday we have discussed about this. So those details, if the trust has any incidental business, that details has to be given. Incidental business means, like for example, if a hospital runs a pharmacy, that is considered as an incidental business. If it is a school, if it is selling uniform, books, book stationaries like that, that is an incidental business. And that will be coming under section 11(4)(a), and the business itself is given as a donation to the trust, and that profit of that business is used for the object of the trust, that will be treated under section 11(4). So separate books of accounts has to be maintained for those kind of businesses. If their turnover is more than the tax audit limit, then tax audit report also to be filed along with Form 10AB, along with Form 10B. TDS and receipts. So if you see, this class 19 asks only about the TDS and receipts of 194C, J, H or Q. It is not asking about any TDS and rent or interest, because the purpose of this is to identify whether any business activity is carried over by the trust. So we have to give the detail about only 194C, J, H or Q. So class 20 we will discuss in class 39, both are one and the same. So this is the very important part, class 21 to 27. So voluntary contribution, this is the income part, we have to disclose it here. So voluntary contributions which we have furnished in Form 10BD, that has to be given here. There are certain donations which we have disclosed in Form 10BD, that is has to be given. So there are certain donations which is not disclosed in 10BD. So that donation, whether we have to disclose in class 4, 23 class 4 or 23 class 7, this is a question. So if you are filling it up in class 4, there is a more chance of treating this as an anonymous donation. So as far as my advice is concerned, we can fill the donations which is not reported in Form 10BD in the any other voluntary contribution not form of Form 10BD. So here all the details about the donation we have to fill it up. Any anonymous donation we have to give it in the class 6. So 24 totals to total voluntary contribution, total donations during the year. So 25 is about foreign contribution, and 26, this is the bifurcation of this donation, which is included in 24 total donation inclusive of corpus donation we have to disclose in this part. And this is the bifurcation. Here the corpus donation, if anything, we have to bifurcate here, and we have to report it. Any corpus donation which is not eligible for exemption. And total 27 voluntary contribution required to be applied by the auditee. So this is the amount which is available to apply. This is the voluntary contribution which is available to apply. And 28 income other than voluntary contribution. For example, up to 27, we have to give the voluntary contribution, foreign contribution, and corpus donation, plus all other income like interest, rent, dividend, project income, school fees, hostel fees, hospital fees, etc. Everything has to be given in say class 28, and in that the income disclosed in 27 and 28 contains any income applied outside India. So that we have to disclose it here, and class 30 arrives at the figure income required to be applied in India by the RT during the previous year. From this figure, we have to calculate 85% of the application. So very, very simple. This voluntary contribution plus foreign contribution corpus has to be given up to 27, all other income in 28, and income applied outside in India has to be given here. That has to be deducted from the income, and the resulting figure is the income to be applied. And this class 31, application of income. So this application of income, this is very, very, very important. And this form 10B and 10BB earlier, this form 10B and 10BB are only 2 pages. So before assessment year 22-23, sorry 23-24, the form 10B will be only 2 pages, and we will be filling 2 or 3 lines. However, now the form 10B is where 10B contains the data which is very, very more than the tax audit report. In this, the big complication comes here in that application of income part. If you see this application of income, we have to report in 3 formats, in 3 types. That means 3 varieties of same data we have to present in 3 different types. That means one is object wise. In that object wise, in electronic and another electronic mode. So total application of income, if it is a cash, we have to show it under other than electronic mode. If it is not, all other transaction which is not as per the electronic mode, which has to be shown in the other electronic mode. So all the expenses has to be bifurcated like this: object wise, electronic, non-electronic wise, and revenue and capital. So the same data has to be further bifurcated into revenue and capital. And if that expense is more than 50 lakh to a single party, that has to be given in detail with the PAN number, party name, TDS details, everything has to be given here. So this class 31, first we have to bifurcate object wise, electronic other than electronic wise. So here we will be giving the total application here. From the total application, if the payment is made in excess of 50 lakh to a single person, then those details has to be given here, that person, PAN number, TDS registration, everything. And if you have any amount which was not actually paid during the previous year, that has to be deducted. Earlier year deducted amount which is paid during the year, like for example, if there is a creditors outstanding, that has to be deducted here. If the earlier year's creditor paid now, that has to be shown here, and the resultant figure will be auto populated. This is the total application during the year. So this total application will be further bifurcated into revenue and capital, and after that certain allowances and disallowances to be reported here. If any replenishment of corpus, yesterday we have discussed that if you have spent any amount from the corpus, that has to be put back within 5 years. So that replenishment has to be disclosed here. If there is any repayment of loan, that repayment is within 5 years, you are eligible to claim it as an application. That has to be reported in class 8. these are all the amount allowance. This is the amount to be disallowed from the application. So I have noted down what are all the disallowance. Here the main part is these two things, the TDS disallowance and cash disallowance. For example, if you take this cash disallowance and TDS disallowance, the total receipt is 1 lakh and I have spent 1 lakh during the year itself. However, for 30,000, I have not deducted TDS. So I have to disallow 30% on that 30,000, which comes to 10,000. So if I reduce the 10,000, my total application during the year is 90,000, which is more than the 85% which is allowable. However, as per the income tax return form ITR 7, if we are disallowing this TDS and cash disallowance, it is calculating directly tax on this amount, which is not mandated in the law. So no provision says that this TDS disallowance and cash disallowance has to be taxed. This has to be disallowed and this application of income has to be application of income has to be adjusted. That is the method it is prescribed in the law. However, that income tax return is treating that these two disallowances and charging tax on that. So on this ninth class is corpus donation to other trust, that has to be disallowed. Any corpus donation or donation to other trust not having same object, that has to be disclosed here. And application outside India, that has to be disclosed here. So those things, so total allowances and disallowances, so all other disallowances will be, any other disallowances will be disclosed here. So total allowable application, this will be auto populated here. And after this application, if there is any shortfall, so if you have filed the form 9A, that is you have accumulated for next year or to the year in which the income to be received, so that detail has to be given here. If you are accumulated up to next 5 years, those details has to be given here in class 20. And the accumulation up to 15% set apart, that has to be given here. So in this, there is a problem with ITR 7 and 10B. There is a mismatch for the same figure, the same disclosure. For example, in one case, if you are donating any amount to another trust, only 85% is eligible to claim as an application of income. For example, if you are donating 100 rupees to another trust, 85 rupees is eligible to claim as an application of income. So however, in ITR form, it is the calculation is correct. It is taking the calculation that arriving the calculation is correct. However, if you come to 10B, there is a mistake in this schema, this form itself. What it does means that 15% disallowances, it is adjusting in the income part also and also in the application part. For example, dual deduction, that 15% disallowances for the donation given to the other trust, only in that case this difference will arise between form 10B and ITR 7. So it is deducted in the income part and also in the application of income. So in that scenario, what we are doing is we have giving that difference amount in the any other disallowances, and we are giving a note in the observation part. So this is the error in the schema itself. So one form is taking it correctly and another form is taking a different stand on that part. So section 115 BBI, there are certain cases in which your income is taxed. So those those scenarios which is taxed under section 115 BBA has to be reported here. So these are, for example, you have accumulated it for the next year, you have filed form 9A. However, you have not applied that income, means that is taxed under section 115 BBI. So for same for the form 10. So if the income is applied other than the charitable or religious trust, if the investment is ceased to be invested in 11.5, not utilized for that purpose, the accumulated income paid to other trust benefit to the specified person. So these are the scenarios under which section 115 BBI and 30% is taxed. and there is no slab rate benefit is applicable to these scenarios. So total disallowances will be taxed at 30%. So other income. So any other income chargeable to be given here. And if you are 80G registered trust, those details has to be given here. And capital asset, any capital asset is transferred, and capital gain, yesterday we have discussed about this, those details has to be given here. And section 30, class 37 and 38, this is also very important. For example, if a trust is receiving a donation of rupees 1 lakh during the year, but it has spent 1 lakh 10,000 over and above the receipt of income, means that 10,000 excess spent, there is a reason for the excess spend. So if you are spending more than the total income received during the year, so that reason has to be given. So that is this application of income out of the following sources. This is the application income out of different sources other than the income during the year. So there are chances of spending that amount either from the accumulated part, which is accumulated for next year, or accumulated for next 5 years, or it is the regular accumulation from the earlier year 15% set apart part, or it may be spent from the corpus, or it may be spent from the borrowed fund. If it is spent from any other source of income, that has to be shown here, that has to be disclosed here. And this, if this application is more than 50 lakh, that party wise detail has to be given. So section 1310 and 22nd proviso. So as we are all are aware that if we are not submitting the tax audit report, if we are not filing the income tax return, if you are violating the section 215, if you are not filing the income tax return on the due date earlier, before the introduction of section 1310, earlier what they'll do, the assessing officer will disallow total application of income and will tax the gross receipt of the organization during the year. So for total income, they will be charging tax. So however, the section 1310 has been introduced before 2 years, and it has prescribed the method on which income tax has to be calculated during these scenarios. For example, these violations: non-submission of audit report, non-maintenance of books of account, non-filing of ITR, 215 violations. So how the tax has to be calculated earlier, before assessment year 23-24, gross total receipts will be taxed. However, with effect from assessment year 23-24, this income is computed by deducting only revenue expenditure. So revenue expenditure alone you are eligible to deduct from the income. So no deduction is available for capital expenditure, expenditure from opening corpus. If you spend from any corpus, opening corpus, it is not allowed. Expenditure from loan or borrowing, depreciation, if you are claiming depreciation, depreciation is not allowed. If you are contributing or donating to any other person, it is not allowed. Any other trust or any other registered trust, it is not allowed. And section 40A1A and 40A3 transaction has to be disallowed. So no deduction for any other expenditure, allowance or set off or loss. So income tax will be calculated on the income, only allowing the deduction of expenditure after adjusting with section 40A1A and 40A3 disallowances. So this is what the section 1310 has been introduced. So those kind of details, if anything auditor come across, that has to be reported here. If it is reported here, they'll directly tax the organization as per the computation mentioned in section 1310. And we'll move on to next slide. And for expenditure incurred for religious purpose, if any charitable organization spending for religious purpose, then that has to be mentioned here. And related party transaction, class 41 and 42, related party transactions, that has to be filled here. If it is not in the arm's length transaction, arm's length basis, that has to be given here. On a regular business transaction, that we need not to be disclosed here. So that is based on the professional judgment of the profession. We can check that whether this is a fair value or not. That fair valuation is as per the judgment of the professional who is certifying that. So those details, there are 7-8 types of transactions which is referred in section 13.2. So these are all the transactions which is made with the related party. If it is not in a fair value method, then that has to be reported here. So who is related party? Yesterday we have discussed in detail. There is a concept called substantial contribution. So the substantial contribution, this definition has been amended during Finance Act 24-25. So for current financial year, it is 1 lakh during the previous year and up to 10 lakh from the inception of the trust. So that is, they are also considered as a related party. So if any person who is making a donation more than 1 lakh, he is considered as a related party, and the transaction with him also to be tracked. So class 43 and 44, specified violation. There are 7 types of specified violation. So if these specified violations triggers, there is a chance of cancellation of registration. So yesterday we have discussed about this cancellation of registration. So the officer has the powers to cancel our registration if they come across any this specified violation. So what are these violations? Are income has been applied other than for object of the trust, or the business income which is not incidental to the attainment of object. It is applied to any private religious purpose. It applied to any benefit of particular religion or community or caste. The transactions are not genuine. The RT has not complied with the requirement of any other law. This is a very vulnerable class, that if you are not complied with any other law, for the time being enforced, the order, their direction or degree by whatever name called, holding that such non-compliance has occurred, has either not been disputed or has attained finality. So for example, if you are receiving any GST notice, GST order, you have received GST order and you have not disputed that, and the order has attained finality, whether will this cover under this limb? So these kind of questions are, there are many unanswered questions, this kind of questions. So this has to be taken in a in a broad manner. We have to decide as per our professional judgment. So this is a very vulnerable condition for this cancellation of registration. So what happens once the registration is cancelled? So section 115 TD attracts. What is section 115 TD? Exit tax. So exit tax attracts. So how the exit tax is calculated, that that also we'll discuss today. So these are all the 3 scenarios in which this exit tax under section 150 TD is attracted. So first one is if registration is cancelled or objects are modified but not applied for re-registration. So that re-registration application is very, very important. If the object is modified and re-registration is not applied, means then exit tax attract, and not applied for renewal or expiry of the registration. So this will attract section 115 TD. So in 115 TD, accredited income will be taxed on maximum marginal rate. So what is that accredited income? So total fair market value of all assets in the balance sheet. For example, you would have had the land which is purchased in before 20 or 30 years, purchased for 1 lakh rupees. That fair market value may be today 1 crore or 2 crore. So that fair market value will be taken. From that, liabilities will be reduced. Any liabilities, income tax paid will be reduced. Assets not represent the value, like for example, deferred tax, that will be reduced. Any agricultural income on income during before period of registration. If you have any income which is earned before the getting the registration of 12A, so those will be deducted. On the total net worth, maximum marginal rate tax will be attracted. So that is the section 115 TD. So if any specified violation occurs, this 115 TD attracted. And this part, class 45 to 49, which is very similar to tax audit report. We have to disclose the details about section 269 SS, 269 ST, 269 T and TDS schedule. So I hope I have covered all the aspects of Form 10B, and in the same slide I have given the applicability of these classes in Form 10BB and ITR 7. So you can go through that. So these are all the common mistakes which we make that I have given in this slide. You can go through this slide. So with this, my session comes to an end. If anybody having any question, you can comment it on the chat box. I'm happy to answer that. So I shall answer the questions which is already posted in that. So one trust got their 12-year registration, which was sanctioned 20 years ago. In the last year only, they applied for registration of renewal as they are not aware. Assessing officer not yet issued the order. Is it possible for audit without AO allowed registration? Whether it is possible for filing IT if audit is not possible till renewal of sanction or any other alternative? Sir, in this case, since the order is not yet received, I don't know whether you have applied with the condemnation delay or not, from which financial year you have applied, I don't know. So, but it is advisable to file ITR 5 instead of ITR 7 as a precautionary measure, since the registration is still under process. So instead of filing ITR 7, you can file ITR 5. So date Mr. A is trustee in 3 trust. Will it be related party for transaction between 3 trust? Yes, sir, we have to check. So there is a common trustee. That trust will be treated as a related party transaction. So we have to check for the transactions. So any other questions? So we can close the session.
Yes, sir. Please close the session.
Yes, sir. Yes, sir.
Thank you so much, sir.
Yes, thank you very much. I would like to extend my heartfelt thanks to the educating team for giving me this opportunity to present to the knowledgeable educating members. And if do you have any doubts regarding the taxation of NGOs or NPOs, you can contact me at the mail ID and mobile number I shared in the screen. So you can contact me at any time, no issue at all. And thank you very much for the members for this opportunity.
Thank you so much, sir.
Thank you.